Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Nick Hodge, who is the co-owner and founder of Digest Publishing and publisher of the Daily Profit Cycle, as well as an editor of Foundational Profits and Underground Alpha. How you doing today, Nick?
I'm doing great, Darrell. Pleasure to be with you. Thanks for having me.
Yes, indeed. I was able to hear you speak at the New Orleans Investment Conference, so I'm glad we are able to connect, and then looking forward to seeing you at the Vancouver Resource Investment Conference as well.
Always good to connect with investors and colleagues for sure. I'm glad you got to hear me speak, and I look forward to connecting with you in Vancouver.
Yes. So audience, if you haven't yet, be sure to click the link that is pinned in the comments that is to the Vancouver Resource Investment Conference, where it is free for you to attend. So be sure to click that link so that you can catch up with Nick and I in person at the conference. And so, Nick, you've been around the block for a while. You know, I was listening to you speak, and you have connections with some of the legends in the space. I mean, Rick Rules and many others, right? And just seeing like the performance of your portfolio over the years, where you're able to um, find assets that are cheap, and you're kind of one of those investors that are able to weather the storms and such. And so I just want to start with some of your kind of investing philosophy, and how are you able to stomach like all of the volatility, the bad news, and everything? Because I think you started. You mentioned in a previous interview I was listening to you. You mentioned like in 2017 you were buying some of the equities, and thinking about that, that was like 8 years ago. And so most investors can't even, hold on to a stock for a year, and they may experience a decline after 20% and just get shaken out. And so I'm just curious in some of your investing philosophy and discipline.
Yeah, I think you have to have conviction in whatever you're investing in. And when it comes to the metals, I've had a philosophy going back really to the global financial crisis in 2007 and 2008, and then seeing what gold did after that and silver as well. That was really my first introduction and education into markets and the natural resources. And I saw, what the federal government and the Treasury Department and the Federal Reserve did to bail out the banks, et cetera. And I started digging into some of that stuff. And, it was a real head scratcher on the one hand and a real eye opener on the other to see how the government and those institutional entities were catering and kowtowing to those big banks, and really not bailing out the people or having the people's best interest in heart and mind. So that's when I started learning about gold and, dollar devaluation and money printing and quantitative easing. And from there, I expanded into other resources and just started really learning about the game of natural resources, especially the junior end of the spectrum, how these companies are financed, how properties are explored and developed, and was able to secure some good mentors along the way, some of which you alluded to earlier, that sort of showed me the ropes, taught me what to look out for, and more importantly, told me what to avoid, right? What some of the red flags were. And just going back to the conviction, it was pretty clear to me 10, 12 years ago that what we're seeing actually now in 2025 was eventually going to come to pass. And what I'm talking about is governments around the world realizing that they need these things, right? Whatever these things are, uranium or copper or rare earths or some of these other strategic and critical minerals that you've been hearing about, they were going to need to secure their supply because we had outsourced all the production to essentially China and some African nations. And I knew that was a precarious situation to be in. And eventually the chickens were going to come home to roost. And so when you ask, how are you able to stomach those downturns and weather the volatility? There's a couple of things. One is knowing that it's an inherently volatile sector that, when you talk about Rick Roll or some of my other mentors, they've showed me and taught me that some of their biggest winners first went down 50% before they delivered the returns that they're known for. And then the other thing is just knowing you're right and staying with it. There's sayings in Wall Street and resources that that epitomize this, like get right and sit tight, right? And so sometimes it takes longer to pay off, and the resource sector is certainly cyclical. But when you're right, and then the cycle and the markets turn in your favor, you're able to make a lot of money in this space. And I think we're in one of those times right now.
Yeah, yeah. So you mentioned just the global financial crisis was a pivotal point where you started doing a lot more deeper due diligence and studying on what is taking place within our broader government and world economy and such. So you mentioned that the banks having to be bailed out. And so I'm curious if you are thinking that the government has to get bailed out at this point with the amount of deficits, interest expense on the debt, the amount of capital that's going to take to finance some of these onshoring of natural resources and kind of protectionist policies and such. And so just curious in your perspective there.
Yeah, a couple of questions there. I'm not sure who bails out the government, right? I don't know if they have a large enough tax base to do that. What I do know, and what I've seen over, my near 20 years, is that they always come up with some way to change the rules or move the goalpost or come up with something new to evade what many of the gold bugs, view as insolvency or too much debt and obligations in terms of unfunded liabilities that they don't have the dollars to pay. And yet, the world just keeps on turning some way or another. And so, I'm not one of these guys. I used to be in my 20s, but I sort of wised up. And when I didn't see the world end, I'm not one of these guys that calls for the end of the world or crashes or things like that. What I do see is what is right in front of my face. And that's governments buying gold, right? Central banks buying gold. Governments continuing to run up debts that they can't pay, and at some point, they're going to have to do something to address that situation. And it's really tough to look in your crystal ball and know what that's going to be. But there's a reason that central banks are buying as much gold as they have been buying, and there's a reason that governments are also interested in cryptocurrencies. You mentioned the government writing checks for, I think you were alluding to investing in some of these resource companies like we've seen recently. And I think they're only just getting started as far as that's concerned. So, they've done a couple of deals with companies like MP Materials and Trilogy Metals and Lithium Americas, but literally just this week, before you and I were talking, the Trump administration announced that they're going to continue investing in critical resource companies. They're going to continue taking direct stakes. And so, we can argue about whether that's socialism or whether that's true capitalism. But again, those sort of debates don't add to your bottom line. They don't put money in your wallet. It's just sort of hot air. If you can just accept the reality that's in front of you and learn how to harness what's going on for your own personal gain and in your own portfolio, then for me, that's what it's all about. And so where do they get this money? I mean, the government creates it essentially, right? And then they just run up the tabs. So, but the government's debt doesn't affect my portfolio. If they just continue to write checks in these companies, then I'm happy to go along for the ride and continue to suss out which companies are going to be sort of the best in breed or have the best shot at either getting some of that government cheese and support, or providing some of the metals that the government needs. And there's a whole smorgasbord of those metals, not just the rare earths, but all sorts of ones like antimony and cesium and tantalum that maybe you've talked to other guests about. But that's sort of where my head is right now, and that's been my investment philosophy of late.
Yeah. Appreciate that. I was thinking about when we're thinking about like gold, obviously gold being money, I view it as insurance, and thinking about the devaluation of the currency to push some of these initiatives, and also to fund like a lot of the promises, the subsidies and the promises that have been given out over the years. And so I think gold is one of those I argue the only asset that really withstands like that currency devaluation and such. And so let's start with gold. Let's get your outlook on gold. Obviously, central banks are buying. We see that's a continued trend. I saw that the World Gold Council just put out another article and update in their forecast for 2026 and such. They're expecting like more buying from central banks, and so I'm curious in your perspective on gold. Let's start there.
Yeah. First, let me take a step back and address what you were talking about in terms of insurance. So I view gold in two ways. One is what you said, insurance. That gold is in my safe or in some safe storage that I don't worry about, I don't think about, I don't view it as part of my investment portfolio. You've probably heard people say this. It's like insurance on your house, right? You don't want to have to use it, but it's there in case you need it, right? And so, yes, it maintains your purchasing power for sure. The way, it was explained to me, or at least the clearest way that I understand it is, 1 ounce of gold in the 1960s or 1970s could buy you a real nice custom tailored suit. And 1 ounce of gold in 2025 or 2026 can still buy you a pretty nice suit, but the same amount of dollars in 1960 or 1970 certainly can't buy you that same suit in 2025. So that's that purchasing power. The other way I think about gold is as an investment or as a base or an anchor of your portfolio. And so I express that by owning, ETFs, either, GLD or something that has a physical backed, like Goldman Sachs has a physical backed ETF, and I believe Sprott has a physical backed ETF. And I view that as sort of a base of my natural resource portfolio. And then I expand on that with either minor ETFs or individual mining and junior equities. So just a minute there on how I sort of view gold and how I use it in my portfolio. As far as an outlook, I mean, we had a really good year for gold. It's something like, here, let me just click my button here because I have a chart up. It's up 59% for the year, right? I know it's been outperformed by silver of late, but that's a really strong performance from gold. We had a nice correction in the October-November timeframe where it was pulling back a little bit and really just did a healthy 10% correction. And now you're back up around $4,200 an ounce gold. And that's a really healthy level. So let me start there and say that, we don't need gold to go to 5,000 or 6,000, even though it likely will in the next 18, 24 months. Gold at 4,200 relative to the miners is a very good price when most of these companies that are developing or exploring are using still $2,500 or $3,500 an ounce in their PEAs, their preliminary economic assessments, and their pre-feasibility studies. And then the miners are producing gold on average for something like $1,800 to $2,000 an ounce. And so they're making double their money. So that's a really healthy gold price for the producers and certainly the royalty and streaming companies as well. They get paid on that current price of gold. So as far as looking forward, predictions are always hard, especially about the future is the saying, but none of the fundamental drivers for gold have abated or gone away. You mentioned we're still seeing central bank buying. There's been absolutely no willpower from the U.S. government to cut spending or debts or deficits, despite all the talk that there was about doing so when Trump first took office and the Department of Government Efficiency or DOGE was formed and Elon Musk was walking around with his chainsaw. Like none of that played out, man.
Like 2 trillion, I think.
What's that?
I think he was going to cut 2 trillion.
Yeah, no, but what has happened instead? The debt just continues to go up, right? None of those cuts materialize. We continue to run up the debt, and there's all sorts of individual instances of that. Most recently this week, I was reading about Trump accounts where they're going to give every newborn baby for the next 3 or 4 years $1,000. Like that's another $15 billion on the tab. So there's no willpower at all to cut the spending and cut the debt, and that continues to drive the gold price. You mentioned a dollar devaluation. I'm not one of these dollar doom guys. I don't worry much about, BRIC currencies or China replacing the dollar or the dollar's status as a reserve currency. We have a thing called aircraft carriers that can take care of that. What I pay attention more closely to is sort of like the DXY, like the dollar index, right? And you could see that when we had that softening of gold and silver in the October-November timeframe, that the dollar was strengthening. It was heading up towards 100 on the DXY, but now that's starting to pull back, and that gives a tailwind to gold when the dollar softens softens. The other thing that's happening and is likely going to continue to happen is the Fed's going to cut rates. They have a meeting in December, in early December, that is now, the market's pricing in something like a 75 or an 85% chance of a quarter point rate cut. And that's, again, another further tailwind to gold, right? Traditionally, the rates and the dollar trade inversely to gold. And when rates are going down and the dollar's going down, that's good for gold. And you're going to see that continue to materialize into the new year. And so, look, people want price predictions, and I don't really like to give those. But what I'll say is this: you could see gold consolidate or fall down to 3,600 and still be in a very robust gold bull market. And conversely, like I said earlier, you could see gold go to $5,000 to $6,000 in the next 18 to 24 months, just as the word gets out. And that's probably the last thing I'd say about gold is it's still underowned relatively by generalists. It still gets poo-pooed in the media. They still like to write more about when it goes down than when it goes up. But I think the word is getting out. You can even see it relative to Bitcoin in the past couple of months, how it's performed as Bitcoin has softened a bit. So I think people are starting to understand gold. And just one more thing on those crypto folks is they understand the reason to invest in gold, right? If you listen to the crypto folks, they talk about counterparty risk, independence from the dollar, the inability to create more Bitcoins. Well, all those three things apply to gold as well and are reasons that you would own gold. And so I've been saying for about 8 years now that some of this crypto money and these crypto folks were eventually going to come into gold. My saying has been that the crypto soldiers have been training for the gold army. And so for all that I just laid out there, I think that the gold bull market continues, and you can sort of extrapolate that out to other precious metals as well.
We've got 3 of the best porphyry copper targets that I've seen in the past 25 years of exploring for porphyries. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. We've put our foot on 2 outstanding projects in central British Columbia with copper and gold and some molybdenum in there. Our Poplar South project, we're drilling there at the moment, and I think we're on the verge of a major discovery. If you want to learn more, you can find us at vizslacopper.com.
Yeah, so recently we did see that sell off or that mini correction in gold, but then when the Bitcoins and the cryptos, as well as the broad indices started to come under pressure, gold stayed very strong, silver stayed very strong. And I was kind of thinking when that was happening about this being a signal to other investors. I mean, when they're looking across like the investment landscape and you see these 2 assets, gold and silver, as well as other commodities staying strong relative to the risk on assets such as cryptocurrencies, as well as some of the stocks. And then I was also thinking about that. Okay, gold and silver staying strong through that time period. And then also the price targets from the big institutions that have been coming out. I mean, even Morgan Stanley advocating for 20% allocation of gold. And I'm kind of wondering, okay, when does that capital start to rotate into the metals and into this sector? And so I'm curious if you have any perspective on that.
I think you laid it out pretty good there. I did see the Morgan Stanley report, sort of altering that 60-40 portfolio from 60% equities and 40% bonds to 60% equities, 20% bonds, and 20% gold, which you just said. I think you're seeing it in real time. Look, Costco's been selling out of gold bars, for example. I think that's pretty good evidence of the retail crowd coming into the gold space. And then I think that these earnings reports from the major miners are going to continue to do the same thing. So they had a good quarterly earnings last quarter, and I think when they start reporting the next quarter earnings, that's going to send off some alarm bells as well, because as I alluded to earlier, these guys are producing gold for something like $2,000 an ounce. They're selling it for $4,200 an ounce. And what's different now than it was sort of last year and prior to that is the inflation has abated. So if you think back to the end of the Biden administration and the start of the Trump administration, we were dealing with 7, 8, 9% inflation in some cases. And that's really come down. I mean, it's still at 3%, nowhere near the Fed's 2% target. But in terms of input costs for the miners, I mean, oil's below $60 a barrel, for example. And so the margin on these gold production ounces is I think going to attract some eyeballs when they start reporting. And then I think that's sort of about it. I think that the word is getting out there that gold and gold equities are in a bull market. And I think that just sort of, begets more eyeballs and more positive sentiment and therefore more investment dollars as that snowball sort of continues to roll.
Got it. So when you look at the chain, I mean, so obviously you're into alpha investing and such. And so when you look at the chain regarding, producers, developers, exploration, royalty streaming, where are you seeing the most opportunity? I mean, obviously, it depends on each individual company and where they're at according to your evaluation or their net present value and such. But where are you generally seeing the most opportunity?
Yeah, I mean, I'm not an analyst, so let's get that out just right from the gate. But I do allocate my own capital and I run my own money. So I'll essentially just talk my own book. I'm in the mid-tier producers, in some large tier producers. And when I do that, I express that mostly via ETFs. I'm not out there buying individual gold stocks. I own largely GDXJ to express that. I've been long that for a couple of years and continue to be long that. More recently, I'm talking about less speculative capital right now. I'll talk about more speculative capital in a second. More recently, we've branched out into an ETF called SLVR, and that's a Sprott ETF that holds a lot of silver miners as well as some physical silver. And we entered that earlier this year and are up something like 70 or 80% inside of 12 months, which is really good. And then even more recently than that, I've rotated a bit of capital out of GLD and out of GDXJ, the fund that I just mentioned, and went more broad-based into larger and maybe not as precious miners through an ETF called PIC, P-I-C-K. And that owns, yes, some gold and silver miners, but it also owns some steel producers and some met coal. So just broadening out into a more wider commodity bull market. So rotating a little bit of capital out of precious, but still bullish on precious, and then into the wider commodities. And then when we go down the stream, that's where I get into individual companies. That's where I'm really a speculator and have put capital to work and help others put capital to work into earlier stage speculation via private placement and smaller market cap companies, sort of sub $200 million. And then when we write private placement checks, they're sort of sub $50 million. Sectors that we look for, I think brownstone developers is a good place to be. These are companies that own assets that have produced before, that have maybe assets in place or some infrastructure in place from that past production, and therefore aren't as risky, and there's not as many unknowns to get from something like a greenfields exploration project all the way to development, right? You sort of have a head start, or you're starting at the 50-yard line. We've seen some of these projects do really well of late. We were in a company called Perpetual Resources as early as 2013, and as recently as 2 years ago, that was a $3 or $4 stock. They just broke ground on their project in Idaho last month, I believe it was, or maybe in October. And we've seen that stock in the past 12 or 18 months go from $4 to $40. Now, they do have a critical metals component as well, and they got some money from the government, so that helped them along. But that's just an example of a development company, a brownfields development company that it was a past producer in World War II, and so it was easier to get permitted. At least of late. It took 9 years before the recent spotlight came on these equities lately. That's sort of the sector that I'm looking at for my speculative capital, and then for even more risky capital, sort of private placements where we write checks into companies that have $5 and $10 million valuations. What I'm looking for there is I like companies that do some form of prospect generation or hybrid prospect generation, and by that I mean they have a portfolio of assets that they vend out, and they get either producers or larger companies to earn into those projects by spending the larger companies' dollars drilling or developing or whatever the goals are to further the project along. And then they may keep a project or two for themselves to drill with their own capital. So you get a little bit of risk diversification. The onus or the risk isn't all on one small company to have good results, because that's really tough. That's where companies get on the treadmill of having to continue to raise capital, and they end up blowing out their share structures and diluting existing holders. And you have multiple kicks at the can, right? If you've got 3 projects vended out to majors or producers, then you've got 3 more shots on goal that you don't have to expend any capital for. And if you keep a project or two to drill for yourself, then if you're able to have success on that project, you can get rewarded in the market more because you own 80 or 100% of it. So I don't know if that answers your question entirely, but that's definitely some different sectors and types of companies that I look at.
Yeah, I really like the prospector generator model, especially like when they're able to get a royalty on the project as well. And so it's a pretty creative way to, especially for a smaller company, to get involved and then also diversify the risk and not have to fund all of that, the drilling and all the costs that come associated with it. So yeah, I definitely agree with you there. So looking at royalty and streamers, like, are you into the royalty and streaming areas as well? What's your opinion on them?
Yeah, I am. I've been actually recently running sort of an advertisement or promotion based on gold royalties, and it has essentially 2 recommendations, and I'll give them to your listeners for free. And again, I do things 2 ways. I do things with safe capital, and I do things with a bit more speculative capital. So, we're in Royal Gold. That's sort of my the stock that I own there in the royalty space, and I like it because it has a large streaming component. And so, there's a difference between royalties and stream. Stream, you get a stream of the profit, right? And the profit, as I was explaining earlier, is quite high now because the margins are so high between the cost of production and the price of gold that these streamers are able to sell for, right? So they prepaid for these ounces at a certain price, and they're able to sell them now either at 4,000, 4,200 an ounce gold, or 55 or nearly $60 an ounce on silver. And then there's the more speculative royalty companies. There's been a lot that have come on recently. I'm not going to run through them all, but you'll see that they've had success as well. And going back to the crypto space, right? Let's talk about Tether for a second. Tether is one of the largest stablecoin companies in the world. They have a very large treasury. They buy more U.S. Treasury bonds than some countries. Like, they're on par with like South Korea, for example, in terms of buying U.S. bonds. Recently, they've turned their eye toward gold, and specifically gold royalty companies. So like central banks, Tether has been buying gold, but they've also been investing in these smaller royalty companies, and they have a mandate, and they've formed a group inside Tether to evaluate these opportunities. And so whether it's Empress Royalty, which is a company I'm invested in, and is the one recommendation that goes along with that promotion that I was just recommending, or another company called Versamet that I've been looking at recently. I mean, these guys are having real good success in the royalty space because, like the prospect generators that I mentioned earlier, they have even less risk, right? They don't have to worry about operational costs and strikes, and sometimes I liken it to the mafia, right? If you've ever seen Goodfellas or something like that, like, I don't care what happened, F you, pay me, right? Like, that's what the royalty companies get to do.
Yeah, I was actually just watching The Godfather 1 and 2 the other day, so I definitely relate to that. So I'm actually in Royal Gold as well as Empress Royalty. So I'm curious in your perspective on Royal Gold, and the acquisition of Sandstorm Gold and the other acquisitions and such, and what's your outlook there for that company?
Again, I'm not an individual company analyst. I'm more of a generalist. So, I think they're starting to digest Sandstorm, which was the acquisition earlier this year. And I'm more of sort of a timing guy. And so we started to buy Royal Gold. I don't know if you remember, but it sold off amid that acquisition, and it started trailing the other large royalty companies like Franco-Nevada, and Wheaton Precious Metals. And that's when I took the opportunity to buy in and told my subscribers to buy in. And I alluded to it in the last answer, but I believe they have a larger streaming component than Wheaton and Franco, which are more heavy on the royalties, and also have sort of not taken their eye off the ball, but those other companies have diversified into other metals, right? They've got copper royalties, cobalt, in the case of Franco-Nevada, they've got some oil and gas. And so, and oil and gas has been soft, as I said earlier. So in terms of, in the case of Royal, it's for me, it's a pure play, precious metals, royalty and streaming company with a bit more of an emphasis on the streaming. And so as long as gold can maintain the bull market and the precious metals prices can stay high, then I think that's one of the most pure ways and lowest risk ways for investors, especially folks, potentially new to the space. And I think there's more of those. We were talking about the generalist audience getting interested earlier. So I think that's one of the first places they go. And I think it'll continue to have positive performance and outlook for all those reasons.
Yeah, and so for those who have more of a speculative itch, so I'm into Empress royalty as well, and Alexandra, amazing person. Her work speaks for itself and such, and she's able to get deals done. And so I'm just curious in your thoughts on Empress.
Yeah, she's got good backing as well, with Endeavor Financial sort of operating the back office of that company, and David Rhodes helping her out as well. He's really well versed in the space, especially in Europe, and knows all the right people and is able to help that company get deals done and put the correct structures together. I think they just reported 9-month earnings the other day. It was record revenue for the first 9 months of 2025, and I know they're in the hunt for additional streams and royalties as well. So I think that would be the next catalyst for them, right? They've got a couple of good performing assets. The performance of the stock has been really good this year. And I think that for that performance to continue to maintain, they need to add other assets. And so you mentioned the execution of Alexandra. I think she's going to need to do that in 2026 to bring new assets into the fold to keep that record at revenues and to keep eyeballs on her company.
Yeah, definitely. Yeah. So I had learned about them in 2023 at the Rural Symposium. And so, I got in earlier. I think it was at 29 cents or something. So I know some people got in a lot earlier than me, but, it's always that point where it's like, dang, I wish I would have put more money.
Coulda, woulda, shoulda. Don't kick yourself for making a profit is what I was taught.
Yes, agreed. So I'm curious in your perspective on a company like Revival Gold. They have the Bear Track Arnett project, as well as the Mercer project and such. And I know this is more in the exploration, development stage of investing, more speculative. And so just curious if you got any ideas or thoughts on that company.
Sure. I know Revival really well. In fact, I helped finance it when it wasn't even called Revival Gold back in 2017. It was a company called Strata Metals, if I recall correctly. And I've owned my shares ever since then. I know Hugh and the team really well. And I've been to both projects. I've been to Bear Track Arnett twice, in fact. And I was at Mercer in Utah last year. So hearkening back to what I was just saying about the Brownfields developers, right? Both of those are past producing assets. In the case of Bear Track Arnett, that's the largest past producing mine in Idaho. They've been drilling there for a couple of years. They're taking a break from it now, but it's got a resource in the ground, and they've got a PEA that they've done on it, and are in fact advancing past that to a plan to restart with a small heap leach and then to expand underground. And then what they've done to augment the story is they brought in that past producer in Utah, which is Mercer, which has become their focus over the past call it 12 months. They're drilling there now. That's a past producing asset that was actually Barrick's mine before Barrick found the large sort of Carlin style projects that it's now exploiting in Nevada. That the Merker project was a Barrick mine. And so Revival is continuing to explore. They're improving the metallurgy. Importantly, metallurgy is always important in these projects, proving that you can not just get the ore out of the ground, but that you can get the metal out of the ore. Hugh is a mine engineer through and through, and so he's got a plan to bring this back into production. Utah is a very friendly state in terms of mining. I think I was just reading the other day that their number one export is in fact gold. And they've got a permitting process that is clear and straightforward, and that benefits Revival as well. And I'm not the only one who believes this, right? Other companies have come in and done strategic investments into Revival, and including Dundee Precious Metals, which is helping them with capital and decision making. And so this is one of those stories. I've been saying that Revival is sort of like a little sister to Perpetua, which I mentioned earlier is now in production, not in production, but just broke ground on constructing their mine. That is going to get bought up by someone, right? There's just too much meat on the bone with two past producing projects and infrastructure. And in Idaho, they still have an ADR plant and an adsorption plant. They're connected to the grid. And so there's just a lot of value there that someone, some mid-tier or larger producer is going to want to soak up. And that's why I've been keen to stick with Revival. And the market's starting to realize it as well. I think that stock's at 52-week highs near 75 cents and is starting to get the love from the market. So they're doing all the right things. They've brought in the right strategic investors, and they're executing on their plan with a dual-pronged strategy with sort of a nearer term production story in Merker. And then we just had Thanksgiving, so maybe that gravy on the turkey with Bear Track Arnett.
Yeah, for real. Yeah, that sounds good. So thinking about the silver, like transitioning to silver and thinking about silver. So obviously gold being a more monetary investment or insurance asset, silver has this monetary and industrial component. And so I'm curious in your outlook and your perspective on silver. And then are there any names that you're looking at in regards to silver?
Sure. Silver's the erratic stepchild, right? It moves farther and faster, both up and down. And you've been seeing the up here recently as it started to outperform gold in really just the past month or so, right? Getting up near $60 an ounce, kissing 59. And so that chart looks really healthy. I mean, it's got good short-term support at $53, something like that. And there's no reason you can't see silver with a $60 handle in just a couple of weeks or months. I mean, now that it's broken out to all-time highs, it's above what it was in the 1980s when the Hunt brothers had their squeeze. It's above what it was post the financial crisis. And so that's sort of the most bullish technical indicator there is, right? When you break out to all-time highs and there's no overhead resistance above it. The other thing is it's cheaper, right? And generalists and folks who don't have as much capital can buy it more easily because it has a lower cost per ounce. So it has that going for it as we get into these middle innings of the precious metals bull market. And so I would expect to see silver continue to outperform. I don't spend a lot of time on the silver producers. Myself, I told you earlier, I own them through that Sprott ETF, because there's not that many of them, and silver is typically produced, as a byproduct of other metals production. And so I don't spend a lot of time in that silver production sphere, but I do look at, silver explorers and, to talk my own book as I do, because that's what my newsletters are about. I write about stocks that I own, right? Because in my opinion, I don't want to take advice from someone who doesn't have skin in the game or is just paper trading or something like that. So One company we financed in 2024 and financed again this year is called Kingsman Resources. They are currently drilling and reporting results from their project in Mexico, Las Coloradas, which is in Chihuahua, where there's been some acquisitions recently with Los Gatos, and Go Gold has also had some success there. In fact, Kingsman owns a royalty on one of Go Gold's projects. And this is a company that we financed just last year at 25 cents. It's trading today at $2, right? And they've only put out 2 drill holes, right? Essentially, this is a past producing asset. I've told you that I like past producers. Hasn't been mined since the 1940s when it was being mined by a company called Asarco. And the problem back then was they could only mine down to the water table because they didn't have the technology, and the silver prices weren't high enough to make it worthwhile to drill and explore below the water table. So one of Kingsman's first objectives was to drill below the water table and prove that the veins and the mineralization continued. And they did that a month or two ago with the first drill hole they reported that sent shares significantly higher. And then just here in the past couple of days, they put out another drill result showing that they made a new discovery on an area that hadn't been known before, that was in fact gold and silver rich. And they'll continue to drill. They have more results that'll be out in the next couple of weeks. And then they have a separate project nearby called Amaloya that they'll be drilling as well. So very early days in Kingsman. It's still got a sub 50 million market cap, even though it's gone from 25 cents to $2. And that's probably one of my largest and purest silver positions right now.
Mm-hmm. Yeah, so we actually got a question from one of our readers of the VRIC Substack, and they mentioned that silver stocks have lagged silver, and First Majestic is always the one that leads in Toronto. He mentioned that the person mentioned that they're long, looking for the next one, or wondering should they stick with the tried and true. And so just curious in your perspective, because you mentioned that you're not as much into the producers because that's a byproduct and such, which, I mean, introduces a lot of uncertainty. And so just curious in your perspective on the tried and true companies versus like some of these early exploration companies.
Yeah, well, I don't know what time frame they're talking about, but if I look at a chart here, which I'm doing of the last 6 months, I see SILV, the silver ETF, up, I don't know, 68%, and then silver up 69%. So if there's a lag, it's only by a tiny, tiny bit. And then if I pull the chart back to a year, that same silver miners ETF is up nearly 100%, and then silver's up 86%. So not quite sure that the silver equities have lagged. And I can't give advice on, individual silver producers, because like I told you, I haven't done the work, and it wouldn't be right for me to do so. But what I would say is I think that silver's producers as a trade likely have more juice over the next, call it near term, next 6 months to a year, which is why I did reduce my position, as I was describing earlier, in the GDXJ, which is, it's called the junior miners ETF, but it's really not the juniors. It's sort of mid-tier and slightly larger than mid-tier producers. And I deployed more of that capital into the silver names, or the companies that have more silver exposure. And so hopefully that gives that gentleman or lady a bit of insight into the performance of, silver and silver stocks relative to the silver price, and what I'm doing with my own money, which is allocating a little bit more to silver as that price starts to outperform gold.
Yeah. It also depends on what companies you're invested in, because obviously there's some that have run, Vizsla Silver has ran, and First Majestic has ran. I think I was in First Majestic at, $6, and I mean, it's sitting at a little over $15 now. So some of these companies have run, but also there's parts of my portfolio where it's like, okay, I may be sitting on something where no one's really discovered this yet, and maybe I get some significant gains later down the line because they haven't moved as much as some of the others.
I think Vizsla is a great company. I'm a shareholder as well, and they just raised a big slug of capital as well. I don't know if you saw, but at least on the U.S. exchange, when they announced that a week or two ago, the shares went below $4, and it only took but a couple of days for those shares to get right back up to $5. So you can see there's a real appetite for Vizsla stock, and Michael Connors and the team have been doing a great job of communicating the story and just getting themselves out there. So by all means, Vizsla is a good name to own.
Yeah, for sure. Shout out to Mike Connard and Craig Perry over there at Vizsla, good peoples. Curious as we head into the new year, which commodity are you most bullish on? Do you have a most bullish outlook? Are you looking at copper, lithium, rare earths, silver, gold? Which ones are you looking at the most in the upcoming year? Are you like these ones may outperform based on whatever reason?
Yeah, copper's the layup. A lot of people give that answer. I was asked this question in New Orleans, and so I'll give you two, maybe three. Copper's an easy one. Look, we see what's going on now. It's above $5. We've seen the reasons why. We've seen the bifurcation of the Western or COMEX market versus the Asian market because of the. You mentioned you were at the Rural Symposium. I remember being in that hotel and I was reading the news, and that's when Trump was he implemented or said he was going to implement tariffs on copper, and then he walked those back just a couple of days later. I think somebody probably told him that that wasn't a good idea because the U.S. doesn't have enough of its own copper anyways. So, but what's happened since then is there's been a rush to get copper into North America, into that COMEX exchange, and it's left a relative shortage in Asian nations, so much so that they're paying negative treatment charges to get copper to refine into final products. And then we had a couple of black swans, which are always unforecastable, right? We had landslides at one of the largest copper mines in Freeport's Grasberg. That's they say it's going to come back online next year, but it's still offline right now, and everything in mining takes longer than the folks say, is what I found in my tenure. So we'll see how long it takes Grasberg to come back online. There was some seismic activity at Ivanhoe's Kamoa-Kakula. Codelco has not been able to produce as much as it said it was going to produce. And so there's real supply issues in the copper market. At the same time, that demand is coming on fairly strong. Now, it's no secret that these large banks were and have been forecasting a copper structural supply deficit, but typically they have that starting in something like 2027 or 2028. I think that's been pulled forward now with those supply disruptions that I was just laying out, and all the things that you and maybe your readers read about the deployment of AI data centers and electric vehicles and the grid build out, for example. So all the fundamental drivers on the supply side and the demand side are shaping up really well for copper. And so that's a layup. If you want one that's not as much of a layup, I think uranium is still one you have to look for. So it had a good year, but a lot of the names, the larger names, the UECs, the Energy Fuels, the Encore Energies, the Denizens, they're still off 10, 20, 30% from their highs made earlier in the year. And the fundamentals from the nuclear side of things have only improved. And this is one of those cases where I think investors are looking too much at the nuclear side of things. We hear a lot about SMRs. We hear a lot about the utility companies because of the deals that these tech companies have struck with, Microsoft bringing 3 Mile Island back online, and Amazon and Meta partnering with these small modular reactor companies. We look at, Japan, which is just last month approved the restart of the world's largest nuclear reactor, and the nuclear side gets a lot of attention, and that's great. I'm glad that the world and global governments are finally embracing nuclear. But what I hear less about is how the heck we're going to fuel all these reactors, and that, of course, comes back to uranium. I know the U.S. only produces about 1 million pounds of uranium a year and needs something like 50 million billion pounds. And, one of the first mandates that Trump did via executive order when he came in was, liberating American energy. And in a very real way, he's had a focus on uranium. They've approved projects in the American Southwest via that Fast 41 permitting track. There's a couple of projects that have been added to that. I would expect them to take some stakes in uranium companies, just like they've done with lithium and copper companies. And they've already started to support the grid build out and the deployment of new reactors. I think, together with Cameco and Brookfield, they announced recently $80 billion to build new reactors. And so that money and that support is going to work its way down into uranium. And I think you've got an opportunity here with, not that they've been in a bear market or anything, but they've just pulled back a little bit. I think that's a pretty good opportunity to position in uranium stocks. And then a contrarian one would be lithium. I mean, we had some real good success, me and my partner, Gerardo Darrell, and our group in that uranium boom from, 2019, 2020, 2021. We financed what was Patriot Battery Metals. It's now called PMET Resources. I mean, we financed that at 16 cents and then again at 34 cents, Darrell, and it went to $17. It's now proven to have the largest undeveloped hard rock, that is spodumene, lithium project in North America. And it's still early days. They've since made a cesium discovery that is likely one of the largest in the world. Could end up being even larger or more robust than their lithium discovery. And they've got a lot of tantalum as well. So Albemarle, the big North American lithium producer, is already a shareholder of PMET Resources. And Volkswagen has come in and take a stake as well. Now, lithium's been unloved for the past couple of years. It went from something like $10,000 a ton of lithium carbonate all the way up to $80,000 a ton. And then it did what we call the full round trip. As recently as 6 months ago, it was down around $8,000 a ton, but you can see it starting to perk back up. It's near, I think, $13,000 a ton now, up something like 30% in the past 3 months, 50% in the past 6 months. And the drivers aren't going away. We're still seeing record EV sales in China. And we've seen the U.S. government keen to invest in that space via what they've done with Lithium Americas. So I think lithium has completed its downward cycle and is likely back up on the upswing.
Yeah, that's good. Yeah, I appreciate all of that value that you've added there. So, Nick, where can people connect with you and, access? I know you have, you do a lot of publications and such. Where can they connect with some of the work that you're doing?
Sure. I appreciate the opportunity. The easiest place is digestpublishing.com. That's our main umbrella site. You'll see all our free newsletters and paid newsletters there. You can browse ones that I write and that my partner Gerardo writes. And then our free daily e-letter is called Daily Profit Cycle. So that has its own website as well, but you can also find it on digestpublishing.com.
All right. You all heard it. Be sure to go check that out. And then also click the link in the comments below. That is to the Vancouver Resource Investment Conference. Love to see you there in person. Appreciate you, Nick, and look forward to connecting with you in person.
Pleasure, Darrell. Me too.